Hey, what is up, traders? What's up, tycoons? Super excited for today's video. Going to give an update on gold and silver and how the US dollar recently spiking has affected it. We'll take a look at some of the performance, okay, and really compare gold and silver compared to the US dollar, as well as the 10-year treasury yield, because the dollar and yields tend to have a good effect on gold and silver and the prices of those. So if you want to be monitoring gold and silver and possibly trading those, you need to be monitoring the price of those two things as well. So I'm going to break that down, show you guys how the effect really works on those, as well as go into the individual charts for gold and silver. Specifically, we're going to look at the GLD ETF and also the SLV ETF. So if you're new to the channel, make sure to smash the like button and subscribe. We'll jump straight into it with a nice slide presentation beginning us off. Okay, so we're going to come here and we'll get this presentation going. And what we're going to start off looking at is the US dollar versus gold and silver. So Dixie, the US dollar, is going to be here in green. We have gold and silver and silver. Okay. And remember, we're tracking the ETFs, GLD and SLV. So take a look and you can see there's a clear correlation, meaning that as the US dollar it goes up, the price of gold and silver are going down. Now, right around Q4 of 2022, the US dollar peaked, all right, and gold and silver hit a bottom just before that, okay? Now, this right here is actually the beginning of Q4, and we can see since Q4, the dollar has underperformed compared to gold and silver. They have been on a clear uptrend, right? And the dollar has been on a clear downtrend. Now, notice how the spike in the dollar also coincided with the sharp drop downwards in the price of gold and silver. We'll dive into that a little bit more, but this is Friday's price action, and we're making this video over the weekend. Now, again, like I mentioned earlier, you also want to pay attention to some of the treasury yields, right? And so the one that I like to look at is the 10-year. This is going to be ticker symbol TNX. This is the 10-year treasury yield. And what you can see is how these affect the price of gold and silver. So this is Friday's price action right here, okay? And you can see the US dollar goes up, and also the price of, or the rate, the 10-year treasury yield also goes up, and that coincides with a dip in both gold and silver. Now, the reason being was because we had non-farm payrolls on Friday. We had the jobs numbers come out, all right, and NFP day ended up actually crashing a lot of other things besides just gold and silver, as the US dollar has a big effect, as well as the 10-year treasury yield, on multiple things. So if you take a look, we have the stock market here in purple, we have TLT here in blue, we have gold in gold, all right, the dollar in green, and silver, and then TNX, the 10-year treasury yield. So notice how all of those went up, right? We have Dixie go up, we have TNX go up, and what do we see? We see silver crash, we see gold crash, we see TLT crash, we see SPX, the stock market crash. So there's a close correlation to both of those. And if you want to be trading some of these securities and some of these different assets, it's a good idea to definitely pay attention to the dollar as well as pay attention to the treasury yields. But if you take a look from Q4, okay, to the present, the dollar has definitely underperformed, and what you've seen is the stock market has been rallying here recently. Okay, it's up about 12.45% from Q4 up till now. But you take a look and you see gold outperforming, you see silver outperforming, you see TLT, some of the bonds outperforming. Meanwhile, the dollar has been underperforming, right? So if you see, the green line has been clearly in a downtrend, and gold and silver have been much more of a clean uptrend versus the stock market and some of the bonds. Remember, the stock market's here in purple, and notice how there was this big dip period, right? And same thing with TLT, had a big dip right there. But meanwhile, gold and silver continue to rally. So we are seeing a sharp pullback, but it's been on such an impressive rally. Maybe this pullback was due, or possibly we could be seeing a reversal in the trend of gold. It really just depends, but we're going to take a look and actually break down some of the price action using the candlestick charts for GLD and silver. But I just wanted to show you guys how gold and silver have been performing relative to some of the other markets, whether it's the stock market, whether it's the bond market, whether it's the US dollar, whether it's a 10-year treasury. These are all things you're going to be wanting to monitor if you're looking to pay or play potentially any gold and silver trades. So we'll get out of here and we'll hop over into trading view now. Okay. And what we're looking at first is GLD on the daily chart. Now, it looks like there's a lot of information on here that may be hard to absorb or understand if you're new to technical analysis. but I'm going to break it down really simple. Okay, so we see these groups of 3 lines everywhere, 3 yellow lines. What these are is these are the 3 major Fibonacci retracement levels, specifically the 61.8, the 50%, and the 38.2. These are the 3 most common and most well-respected retracement levels. Now, why would you use these? Okay, well, you use these because nothing moves in a straight line down and nothing moves in a straight line up. Rather, you get a move down, retracement, continuation of that downtrend, or a move up, retracement, continuation of that uptrend. So you can use it to spot trend continuation, and we have some great examples of it. Okay, so in the beginning of 2022, we can see we have a downtrend. We retrace up to the retracement level, continue the trend, retrace up to the retracement level, continue the trend, retrace up to the retracement level, continue the trend. And what do we do over here? We actually break through our major retracement levels. So this is how you spot potential reversals, guys. So if you're in a downtrend and you retrace and you consolidate a little and then break through your retracement levels, you can spot a potential reversal versus just trend continuation. So that's why I love to use these 3 levels. There are other Fibonacci levels, but when it comes to learning how to use them, these 3 are the most common and the most well-respected. So it's easier to start off with those 3. So you see here, we move down, we consolidate a little, and we actually break through and we flip that prior resistance of our 61.8 to support, and then we start a new uptrend, right? And this is right around Q4. Okay, you see we bottomed out here in October, right before October, and then we started a big, amazing rally. So now that we've started a new rally, there's a couple retracement levels of support to the downside, right? So we have this group over here. This is going to be our larger trend of retracement levels, right? So on a larger scale, we have this big move up, and we could retrace all the way down to these levels before finding support and continuing back upwards for a healthy trend. Now, it's a big move down from where we're currently at, which is about 173, all the way down to 162, all right? So what we're doing in the meantime is we're looking to track our short-term trend levels, okay? So we have our most recent low, right? After we had the move up, we pulled back. So we're connecting this low up to our most recent highs. And if we pull back, okay, we want to be holding these 3 levels, right? These are going to show us that we're in a strong uptrend if we can continue to hold these levels as support. All right, those levels are going to be 173.92, 171.50, and also 169.08. These are the first 3 major levels that I'm looking at. Now, there's a couple boxes on here, right? We have these blue boxes and we have this red one right here. Well, this red one was a supply zone that we pushed down previously in the past multiple times, and price just kept getting pushed lower each time we entered into it. So I was looking to see when I was tracking gold and made it like one of my last gold videos, I said, hey, are we going to find resistance and find a supply imbalance up here, or are we going to be able to push up and potentially fill our gap on the daily chart to 179? That's what these blue boxes are, okay? These are daily chart gaps. There's a gap in between this candlestick here, and then there's a gap in between the following candlestick here, right? And so this space would be known as a gap. If we take a look, right, what we did here was actually a great signal, okay? So what we did was we got a half gap fill, right? And so let me actually zoom in on this for you guys a little bit more, just so it's a little clearer and you can truly see what I'm talking about, so you understand the concept. All right, so if we take a look here, all right, again, we came down and we filled this gap halfway. So there was a gap from here and here, from these 2 candlesticks specifically, right? From this candlestick and this candlestick, okay? After we do that, we come up and we filled half of the gap. A half gap fill is very bearish, okay? If it's an upside gap and it's a gap overhead and you only fill half of the gap, that's a bearish signal. And, you know, sure enough, we got a big move to the downside afterwards. And we didn't really retest this gap and come and fill this gap for a very long time. This is in May of 2022 right here, okay? So these gaps, they fill about 90% of the time. The big question is, when are they going to fill? Is it going to be a day? Is it going to be weeks? Is it going to be months? Or is it going to be years? So I love to chart up these gaps so that way I can help understand where price action is being drawn to. And that's what we were looking at over here. Once we came into our supply zone, we were looking to see, are we going to be drawn up towards this gap and fill this gap and potentially fill the next gap up on 184 on the daily chart? Well, we haven't done that yet. We actually got a reversal and we got a bearish signal on GLD. So if you take a look at your MACD, okay, the MACD, moving average convergence divergence right here, you can see that we got a MACD sell signal right here at this point on the chart. Okay, so we got a sell signal here, and then we ended up getting a sharp move to the downside. Now, I want to see, are we going to be able to create a new demand zone in this area here of our previous supply and basically get a breakout retest and continuation upwards? We now have two gaps up to fill, right? So in the process of coming down to 173, we created a new gap right here, but we need to be mindful of what I mentioned earlier. If we come up and only fill half of this gap and don't end up filling the rest of the gap, that's going to be a bearish signal that most likely we're going to come back down and retest this 169 level. And if we potentially break through those, we could be coming down to ultimately get a reversal back to our 162.50 level. All right. Now we have a couple levels in between then. But first things first is we would have to break 169 to come down. If you take a look, we do have a bearish gap down on the daily chart as well to fill at 152.10. Now it would be bullish. Okay. Now it wouldn't really be bullish if we dropped all the way down here, right? Of course, that would be bearish. But when it comes to signal, same thing. If we get a half gap fill here, that would be bearish. It would be bullish if this thing came down and only filled half the gap and then reversed. That would be a good sign of buyers really taking control in there. So that's pretty much it for gold. For GLD, for the main levels that I'm watching, is we do have two overhead gaps. We're testing our original major retracement levels of support that we want to hold. That is going to be healthy ultimately for this shorter term uptrend after we've had our previous pullback from here. If you take a look, what we're really going to be looking for is kind of like a 5-wave structure to the upside, a nice impulsive 5-wave structure. So that would look something like this, right? So we have our 1, 2, 3, 4, and then 5 would take us up to anywhere between like 188 all the way up to like 195 on gold. Now, that's pretty extended. It may just come up to 188. We could, rise up to 195. I don't know for sure. I'm not a genie. Okay, don't have a crystal ball, but that's kind of like the structure that we would be looking for, is a 1, 2, 3, 4, 5 impulsive move to the upside, at which point we would get an ABC correction back to the downside. Before possibly getting another 5-wave impulsive move to the upside. So that's it for gold. For GLD, those are all the major levels, especially after we got that cup and handle breakout. We want to see this MACD curl back upwards. But for now, we did get the MACD sell signal and it is going down. If you take a look at silver, SLV, okay, it had some similar setups, but not as bullish, not as strong. Okay. Now, when I talk about the similar setups, notice how silver SLV had two gaps up above to fill, right? And look what it did. It was not able to fill those gaps. We really are in a little bit of some bull flag consolidation right here. But really, we wanted to hold above this level right here. We just broke below that level, kind of flipped it to resistance, and we're a lot closer to our 61.8% retracement level. So that's going to be at 2035. Our overhead resistance right now is 2077 and 2118. Ultimately, we're going to be looking to see if we get a 1, 2, 3 potentially to come up here and fill the gaps. Right, the overhead gaps on silver on SLV is going to be 2383 as well as 2307. Now, pay attention to this trend line here. We've been rejecting this trend line for a very long extended period of time. And it's very similar to the trend line that we had in the stock market as well as TLT, right? Starting over here. And this is all the way back in the beginning of 2021 is really when this trend line is from. So it's a very long, and we've really tested it a bunch here recently. So if we do retest it, there's a high likelihood that we'll break it, because the more times you test a trend line or a level, the weaker it gets. But if we zoom back in, okay, we have 2035 is that major support level we need to hold. All right. If we do break that, then there is a chance that we could come down and fill the bearish gap down on SLV, which is going to be right around $18, 18.1, 18.04. That's going to be the bottom of this range right here. But just like gold, okay, due to non-farm payrolls on Friday, silver SLV also gap down. So we want to see, are we going to come up and fill this gap here quickly, or are we going to come up and get a bearish half gap fill and not be able to fill the rest of the gap? Could be a sign that we're going to come back down, retest this 61.8 level and potentially break that and bring us down ultimately to, fill this gap down here. If you take a look, though, the MACD sell signal happened much, much earlier in silver, right? So we got the MACD sell signal over here at this period of time, and then we really consolidated, and we wanted to see it curl back above to show some signs of strength, but rather that hasn't happened. We were also looking at the relative strength index. We had a little bit of a channel here, and we were looking to see if we were going to get a breakout to the upside or a breakout to the downside. I'll make this a little bit bigger for you guys so you can see. But clearly, you know, it definitely did break down to the downside, right? We're consolidating really in this area. And then I got the downside breakdown, and we really seen a big flush. Now notice how, you know, we rejected the trend line a few times over here, and then we did come up above it, but as soon as we did that, it went straight red, straight bearish. Now out of all these plays, I do have a position in SLV, but you know, I'm kind of playing both sides, right? So I have 2024 call options, and then I have March expiration put options. Okay, so basically hedging the long play with a closer dated short play, just in case, you know, we ended up pulling back. And, you know, that definitely has been the case. So just wanted to let you guys know, you know, just be transparent with you guys. All right. Was playing the long side. Obviously that's not working out too bad. I think that position, the long side, is only down about like 10% though. And you know, I do have a nice little hedge there just to really make up for any losses. Okay, so now right here is another one of those levels that I was mentioning, the 78.6. Okay, some people use the 78.6, some people use the 76.4. Sometimes I use both of them and just interswap them out. But if you take a look, we really haven't been able, when it comes to the initial trend that we were in, right? So we were initially in a downtrend, and we retraced up here, and look at how we haven't been able to close above this level. We've wicked above it a couple times, but when it comes to the 78.6, we haven't really got above that, right? So remember on gold, initially when we were looking and we saw how it broke out, retested, and then continued higher. That's what we need to do to see silver go higher, to see SLV go higher, is we need to get above and claim above this 2246 level and be able to retest that as support and push higher. If we can do that, then that's how we can get a much bigger reversal on the, you know, the macro outlook, right? Because this is the beginning of 2022 over here. And you can see heading into 2023, it wasn't a bearish trend, right? Everything has mostly been fueled. This has all been mostly Q4, right? Q4 was very strong for gold and silver, and we saw them push up. A lot of that had to do with the dollar dropping. And, you know, a lot of people think that the dollar is going to continue to drop, but that data that just came out, the non-farm payrolls data just came out, and it really threw a wrench in a lot of people's ideas, and also in the fact that they think that the treasury yields are going to keep dropping. We actually started to see those tick up. So it's a really interesting point right now that we're at right now. Ultimately, you know, we are rejecting it, and we could be continuing this downtrend on a much larger scale, right? But on the shorter scale, we want to see if we're going to be able to hold this 2035 level of support and be able to push up higher, break through this trend line right here, and ultimately fill the two overhead gaps that we have. Those are going to be some of the targets that I'm targeting right now for the long side. And then if we break our 2035, ultimately, I'm going to look and see if we end up coming down to fill the gap right here near $18 on SLV. So that's it for today's video. Hopefully you enjoyed it. If you did, smash the like button, subscribe to the channel. I do want to mention I do viewer requests every week. So if you enjoyed this video and you want to see your stock, your commodity, your bond, your crypto, whatever it is in the next video with a detailed technical analysis, all you got to do is comment below. All right. And I'll make a video as soon as I can.